Thousands of strategies, countless indicators, endless candle patterns you've painstakingly learned from training programs and books full of promises. They all died a long time ago. They're no longer weapons, they're bait. The people selling them don't make their living from the markets. They survive on your tuition fees. They're handing you a blueprint for failure, a formula the market crushed years ago. Why? Because any method that becomes popular turns into an easy target. Algorithms and major funds know exactly where the amateur crowd will enter a trade, and they only have to do one thing: move the other way. If you're still searching for a holy grail someone else wrote for you, you're not a trader. You're prey, walking straight into the trap they built. The market isn't outdated. It's the copy and paste mindset, the belief that someone else can hand you the answers, that has rotted over time. And there's one thing you must understand with absolute clarity: your real edge doesn't come from hunting for a magical strategy. Your edge appears only when you build a system that cannot be duplicated, one born from your personality, your schedule, and your capacity to absorb risk. A system that belongs to you, and one the market can't steal. Let's begin building your system. This isn't a simple task. It's not about drawing a few clean trend lines and convincing yourself that you've got a strategy. This is the process of constructing a living organism, a brain, a structure capable of standing firm in the absolute chaos of the market. What you're about to create is a three-step framework for doing exactly that. And if you take this seriously, you'll quickly realize that this framework is not a method. It's the foundation upon which you build your own rules, your own way of operating. Building a system means stepping out of the victim role, detaching from the herd, and taking the wheel of your trading life. Building your own three-step trading framework sounds simple, but here's the truth. Most traders never complete the first step. Not because it's hard, but because they don't understand why it matters. They want quick answers, plug-and-play signals, flashing green and red arrows. They don't want to think. They don't want responsibility. But this system forces you to grow up. It forces you to see the truth. You are the determining factor behind your results. Not indicators, not chart patterns, not some trader on YouTube. Just you. The first step is strategy filtering. This is not about narrowing your markets to make trading easier. It's about facing a truth most traders avoid. You cannot trade everything. No one can trade gold, EUR/USD, SPX, Bitcoin, penny stocks, and meme coins all at once. That's not diversification. That's blind, reckless greed. All it does is scatter your attention, weaken your judgment, and turn your system into a chaotic mess with no center of gravity. On Wall Street, every professional understands this principle. The narrower the focus, the sharper the edge. The tighter the scope, the deadlier the precision. When you commit to one market, one session, one volatility type, you're telling the market, I understand you here better than you think. And that creates edge. Because the market is not a uniform entity. Each asset, each time frame, each structure carries its own rhythm. A hyper-focused scope allows you to hear the heartbeat of your market. You stop trading with your eyes and start trading with intuition, experience, and sensitivity. The very things algorithms can't replicate. You must pick something you have a genuine connection with. If you only trade equities under a $5 market cap, that's not limitation, that's preference. That's your hunting ground. If you only trade Forex during London, that's not restriction, it's optimization. That's where volatility is clean, structure is repeatable, and order flow is consistent. A system doesn't seek perfection, it seeks consistency. But here's the real question. Are you willing to drop the markets you don't understand? Are you willing to abandon the pairs that keep bleeding you? Are you willing to walk away from addictive instruments like gold or Bitcoin simply because they don't fit your personality? Most traders aren't disciplined enough to do that. They cling to the markets that hurt them, the way addicts cling to the very thing that's killing them. But once you truly filter, you eliminate dead ends and keep only the one path where you can become dominant. This isn't a technical step, it's a liberation. Once your focus is narrow enough, the second step begins: building your edge. This is where Wall Street separates survivors from casualties. Building an edge isn't about collecting tools and snapping them together like Lego pieces. It's about discovering what, out of everything you've ever learned, actually aligns with your vision, your pulse, your emotional bandwidth. You can use Fibonacci, volume profile, stochastics, EMAs, RSI order flow, whatever you want. But understand this: tools don't create edge. Your combination of them creates edge. Two traders can use the same indicators and produce completely different results. Why? Because each person reads the market differently, has different patience levels, different weak spots, different pain thresholds. These traits can't be duplicated, which is why your edge will never come from a single indicator. It comes from how you assign the right tool to the right job inside your system. To build an edge, you must do what 95% of traders never do: backtest. Not the lazy kind where you drag the chart backward and tell yourself, yeah, I would have entered here. No. Real backtesting, every trade, every setup, every scenario. You must know exactly what happens when you run your strategy 100 times. If you can't prove a win rate above 60% with stable positive expectancy, you don't have an edge. You have a guessing game. Backtesting isn't about finding perfection. It's about finding stability. And when you backtest seriously, you'll be shocked at the cold truth. Most of the so-called strong signals you use to trust carry no statistical meaning. They look good visually. They feel logical. But the market doesn't pay for logic. It pays for what works over hundreds of iterations. A real edge is something you can repeat with consistent results. A real edge is something you trust, even after 5 losing trades in a row. A real edge is something you know will swing probability back in your favor if you simply follow the process. To reach that point, you must face countless tests, countless disappointments, countless moments where you realize the tools you love don't work, and the ones that work aren't always pretty. Edge is built on data, not desire. And data doesn't lie. The third step is what kills every amateur trader: risk management. This is where hedge funds completely detach from the crowd. New traders treat risk management as optional. Professionals treat it as the engine. You can win 90% of your trades, but if you risk more than 2% per position, you will eventually blow up. This isn't a warning. It's financial physics. Risk management isn't about placing your stop loss where it looks good. It's answering the question, how much can I die and still stay in the game? The 2% rule isn't emotional. It's mathematical. If you risk 5% per trade, 10 losses erase half your account. Lose 50% and you need 100% just to get back to break even. Mathematics doesn't care about your dreams. Billion-dollar funds never ask, how much can we make? They ask, how much do we lose if everything goes wrong? They begin with loss. They design systems around absolute defense. They don't try to be right. They try not to die. This is what the crowd never understands. The crowd wants to win fast. Funds want to last long. The crowd wants to double accounts in a week. Funds want to compound for a decade. The crowd trades for sensation. Professionals trade for survival. If you apply the 2% rule seriously, you become a different person. You stop trembling on entries. You stop revenge trading. You stop increasing size after a loss. You become calm. You begin seeing the market as a place of probability, not emotion. And most importantly, you survive long enough for your system to actually work. Here's the truth. Traders don't lose because they're wrong. They lose because they die too early. You can have an incredible edge, but without risk control, one bad trade can erase years of progress. That's why risk management stands last. Not because it's less important, but because without filtering an edge, you'll never have the discipline to execute risk rules. Risk management only matters when you have a system. If you're trading emotions, risk management becomes meaningless advice. These 3 steps are not wealth-building tools. They are mirrors. They force you to look at who you actually are. And the cruel part is, you won't like what you see. You'll see your impatience, your greed, your lack of discipline, your lack of focus. You'll realize the market was never the problem. You were. When you begin filtering, you'll notice you want to trade more, not trade better. When you begin backtesting, you'll see you prefer beauty over effectiveness. When you start managing risk, you'll discover you fear missing out more than losing money. These flaws aren't mistakes. They're human nature. And this 3-step system exists to correct that nature. You'll learn that the market doesn't need to change. You do. You'll learn that the most important skill in trading isn't chart reading, news analysis, or predicting the future. It's the ability to endure being wrong over and over and still continue. A system allows you to do that. It separates emotion from decision. It gives you a structure to act even when you're afraid. It keeps you consistent even when the market is chaotic. And most importantly, it molds you into someone the market cannot crush. This is where amateurs and professionals diverge completely. Amateurs chase the feeling of being right. Professionals chase the probability of being right. Amateurs want to win fast. Professionals want to survive long. Amateurs trade for excitement. Professionals trade for principles. A system is not a pair of glasses that helps you see the market more clearly. It's a filter that removes everything unnecessary. Once you master these 3 steps, the market becomes binary. Either it fits your system or it doesn't. No more gray areas, no more gut feelings, no more maybe. That's the moment you truly become a trader. Not because you make more money, but because you finally understand yourself. The 3 steps you've built, filtering, edge, and risk management, now form the spine of your trading. But a spine only matters when it's supported by discipline. And discipline can't be borrowed. Discipline is forged from only 2 things: pain and truth. The sooner you face the truth, the faster you mature. Truth 1. Every system, no matter how optimized, will go through periods when it underperforms. Inexperienced traders believe their framework is broken the moment they hit a losing streak. They switch methods, switch indicators, switch models. They don't realize that this very act of constant switching prevents them from ever surviving a full market cycle. They don't die because their system is bad. They die because they never stay with one system long enough to understand its internal logic. Institutional desks don't scrap their framework after a rough patch. They adjust frequency, position size, or activation conditions. They understand a winning system isn't defined by how often it's right, but by how much it makes when it is right, and whether that payoff is enough to cover all the wrong calls. A legitimate system must withstand its bad seasons, and a legitimate trader must withstand those seasons without collapsing. Truth 2. Not every winning trade is good, and not every losing trade is bad. A winning trade that violates your process is like a stray bullet. It tricks you into thinking you're invincible. It pushes you to size up, take reckless risk, and believe you can feel the market. When the reversal hits, you give it all back, plus a few extra limbs. A losing trade executed with proper process, proper risk, proper rules, that's what keeps you alive. That's what teaches you to respect your system. New traders look at outcomes. Real traders look at process. Wall Street doesn't pay people who guess right. It pays people who survive long enough to let probability work. Truth 3. A strong system isn't one that produces many signals. It's one that eliminates thinking. Anything that forces you to hesitate becomes an open door for emotion. You must turn your framework into an almost automatic operating procedure. When you look at a chart, you should only answer 3 questions. 1. Do I have a signal? 2. What is the risk? 3. Does it fit the market context? Everything else is noise. Great traders aren't better analysts. They're better noise killers. Once you internalize these truths, you realize a system isn't a plan written on paper. It's the integration of psychology, discipline, and rules that have been pressure tested by volatility. Maturity begins when you stop asking, where will the market go today? And start asking, does my system give me a signal today? You no longer ask, do I think price will rise or fall? Instead, you ask, if it rises, what do I do? If it falls, what do I do? When you stop predicting and start operating, you finally escape the victim role. Most traders fail not because they can't analyze the market, but because they can't endure boredom. Successful trading sounds like a battlefield, but in reality, it's a long sequence of repetitive, almost mechanical actions. Equity curves aren't built through dramatic entries. They're built through machine-like consistency. New traders chase emotion. Veteran traders chase stability. The system is the tool that creates that stability. Here comes the painful part. You must abandon the instinct to win at all costs. The market doesn't reward effort. It doesn't care how many nights you stayed up, how many patterns you memorized, how many videos you watched. It reacts only to your behavior. If you're reckless, it punishes you. If you're impatient, it wears you down. If you try to fight back losses, it destroys you. You only get paid when your behavior aligns with probability, not with what you want. The price of this shift is your ego. You must kill the part of you that wants to win fast, wants to be right often, wants the market to obey your expectations. That part is the deadliest enemy in every market cycle. But once you defeat it, you enter a new tier, the tier of traders who treat the market as a probability engine, not an emotional arena. You begin to understand that each trade is just one sample out of thousands. No single trade deserves your death. You learn to lose small, endure long, and win big. You stop fearing the market because you no longer fight it. You fight your own habits. That's the moment your system truly comes alive. Not because it's perfect, but because you've become the person who can execute it through the worst conditions. The strongest system isn't the one with the highest win rate. It's the one whose owner is strong enough to follow it during its darkest periods. From here, your journey shifts from building an edge to protecting an edge. And that becomes your next challenge. Staying disciplined when the market loses all structure. Staying calm when the data moves against you. And staying yourself when everyone around you is losing control. When a system is born, it's no different from a rookie stepping onto a battlefield. It doesn't matter how many years you've back-tested it, how many months you've forward-tested it, or how many thousands of data samples you've simulated. Everything remains theory until you put real money on the line. Real money is the antidote to illusion. It destroys every fantasy of control. It shatters every bit of confidence built on past data. It forces you to realize the real enemy was never the market. It's your own emotions, the ones that explode the moment you watch your account flash green and red by the second. Running your system is when you begin to see the reality billion-dollar funds understood decades ago. A system isn't built to predict the future. It's built to control your behavior in the present. A strategy, no matter how beautiful, is just a set of rules. What defines you as an amateur or a warrior-class trader is how you react to streaks, how you handle losses, and how you keep your head during drawdowns. And you'll quickly learn this. Winning streaks are far more dangerous than losing streaks. Losing streaks make you cautious. Winning streaks make you reckless. Losing streaks shrink your position size. Winning streaks make you expand risk without thinking. Losing streaks humble you. Winning streaks trick you into believing you understand the market just because a few trades happen to align. And the moment you think you're untouchable, the market hits the reset button. One sudden reversal, one false breakout, one shakeout, one unexpected news candle, and everything you made in 10 trades disappears in one. That's the first lesson of real combat. The market doesn't punish the wrong. It punishes the arrogant. At this stage, your system needs something most traders never build: operational rhythm. Rhythm is the process of bringing your system into real life, day after day, week after week, month after month. You start to understand that every system has good phases, bad phases, quiet phases, and chaotic phases. Each phase requires you to adjust three elements most beginners ignore: trade frequency, position size, and expectations. When the system performs well, you keep the structure intact. You don't increase risk emotionally. When the system enters a bad cycle, you don't change the method. You reduce position size to preserve mental capital. When the market becomes chaotic, you don't force signals. You step aside until the structure returns. Big funds don't make money by trading more. They make money by trading at the right time. New traders do the opposite. They trade the most when their system is at its weakest. That's why they die. A living system is a system that speaks through numbers. Numbers don't lie. Your trade journal, your statistics, your drawdown chart, your expectancy analysis, they're mirrors that show the truth. Once you gather real trade data, you'll see exactly which behaviors are destroying your edge. Maybe you enter too early whenever you see a strong momentum candle. Maybe you exit too early because you fear the market snapping back. Maybe you double position size after 2 losses in a row. None of those actions belong to the system. They belong to human self-destruction. And then you'll see what seasoned traders already know. Veteran traders don't optimize systems by adding tools. They optimize by eliminating their own dysfunctional behaviors. They fine-tune risk thresholds. They adjust take-profit levels. They study data to understand when the market favors their strategy. They build safety mechanisms, daily, weekly, and monthly loss limits. When they hit those limits, they stop, not because the system is wrong, but because they know their brain isn't reliable in that state. That's why veteran traders survive every regime change. Beginners don't. because they don't know when to stop. But the deepest lesson isn't technical. It lies in the brutality of treating yourself like a machine. Once you've run a system long enough, you realize the market rewards the most boring people, the ones who don't get excited when they win, don't panic when they lose, treat every trade as a statistical sample, exit positions early if the rules say so, even if break even is a few pips away, and never ask, why? They only ask, what's my next rule-based action? This is when the transformation happens. The system stops being something you use. It becomes part of you. It drives your behavior. It keeps you stable even when everything around you is chaos. And if you maintain that state long enough, you'll start to see the real edge appear. Not a technical edge, not an indicator edge, but the edge of relentless consistency. A consistent trader doesn't need a complex system. He only needs a good enough system and the discipline to follow it better than the crowd. The market doesn't reward the smartest, it rewards the most disciplined. When your edge starts compounding, you enter a phase most traders never reach, the phase of exponential account growth. Not by taking reckless oversized bets, but by reinvesting profits into controlled position sizing. This is the art of compounding. Big funds don't grow by gambling. They grow by letting profits work across hundreds of rule-based trades. But compounding only works for a disciplined trader. For an emotional one, compounding only makes them lose faster. And finally, this stage brings you to a truth the market has hidden from the masses for decades. A system is not salvation. It is only a compass. You decide how far you go. No system can save someone who cannot save himself. No edge is large enough to fix weak discipline. No strategy survives if its owner can't endure its darkest periods. When you see that truth with your own eyes, you understand why trading isn't a game of analysis. It's a game of psychological endurance. And that's when you truly become a trader, not because you win more, but because you finally understand the true nature of the game you're playing. You no longer chase methods. You no longer fear losses blindly. You know risk is part of the job, and losses are operating costs. You don't avoid them. You control them. You don't run from the storm. You learn to walk through it. If you've reached this point, you've entered a level most traders never touch. And from here, the journey is no longer about perfection. It's about sustained endurance. A system survives not because it's intelligent, but because its operator is strong. And now, you've become that operator. When you reach the end of this journey, you'll realize something most traders spend years and a lot of money to understand. No one can build a system for you. No mentor can hand you a perfect formula. No course can sell you a real edge. And no book can suffer fear, doubt, frustration, or the moments you want to quit on your behalf. A trading system, at its deepest level, is not a set of rules. It is a distilled version of you. It is the purest reflection of your strengths, your weaknesses, your emotional rhythm, your patience, your risk tolerance, and the way your mind processes the world. It's something no one can replicate, and that's exactly why it becomes an edge. If you try to copy someone else's system wholesale, you will break. Not because their system is bad, but because it wasn't built for you. It was written around their nervous system, not yours. It fits their breathing pattern, their analytical tempo, their emotional cadence. And you cannot live with someone else's heart any more than you can survive the market with someone else's system. But the opposite is also true. You can learn from anyone. You can borrow a piece from this trader, a perspective from another, a strategic element from a major fund, a risk principle from a seasoned veteran. You don't need to copy an entire framework. You only need to select the fragments that genuinely resonate with you. Those fragments, fused together through your personality, your discipline, and your lived experience, will become your own system. And when that system runs with you, moves with you, and becomes an extension of you, you stop surviving off the market. You begin living with the market. Your system may be simpler than others. It may not look impressive, glamorous, or Instagram-worthy, but it works for you. It keeps you alive. It helps you trade clearly when the market goes insane. It keeps your mind steady when the crowd loses its head. And most importantly, it gives you freedom. The freedom of not depending on anyone. The freedom of not chasing someone else's signals. The freedom of knowing that every volatility spike has already been accounted for in your rules. No course can sell you that. If there's one final message before you begin building your own system, it's this: respect yourself. Don't expect perfection overnight. Don't convince yourself you must understand the entire market. Don't believe you have to be right on every trade. You only need to be right for you. You only need to build a framework that matches the way you see the world, the way you react, and the tempo your psychology can sustain. If you do that, your system will live for a long time. And if it lives long enough, it will eventually start feeding you. And if you're still here reading this, there's likely a very clear voice inside you saying, I want to build my own system. If that's true, leave a comment because I want to see you begin that journey today. Don't let the next few years slip by, copying someone else's method and blaming yourself every time it fails. Step forward and do what very few traders ever dare to do. Create your own rule book, the one thing the market can't steal. And if you want to continue diving deeper into the psychology, strategy, and real nature of the trading profession, subscribe to Trading Mindset Lab, hit the notification bell, and join a community of traders who actually take this game seriously. Because building a system isn't a one-day project, it's an evolution. And you don't have to walk it alone. You've come a long way, and this is only the beginning. See you in the next chapter of the very game you're choosing to turn into your career.